Good morning, everybody. Welcome to today's episode of Pre-Market Forecast by Blue Collar Trading. My name is Mike. Today is Wednesday, January 29th, and it's FOMC day. So we're going to dive right into the charts. As usual, we have the NQ pulled up. We've got the 4 time frames, the daily, the 4-hour, the 30-minute, and the 5-minute. Let's take a look at where we're at on the daily. We see yesterday we had a slight up day. Yesterday, we're still within the drop from a couple days ago, but we can see where we're at. We're still above this +2 deviation. We have been trickling up yesterday and then overnight tonight. The 4-hour, same thing. You can see up here, we came down, we broke this +1, came down, flirted with this VWAP, and then we're starting to trickle up. Yesterday's forecast, we'll zoom in here on the 30-minute. Yesterday's forecast, we kind of forecasted sideways. I thought we were actually going to stay within this box here. We started to get that basically when the market opened. We came down, bounced off here. When we got to here, we went sideways for a while, and then we did start to trickle up, and then overnight we've been sort of trickling up. So I thought we were going to chop a little bit more in this box, and then the FOMC day we would have got the directional break out one way or the other. So we've kind of already got outside of that a little bit. We'll get into what my thoughts are on the FOMC here shortly, but we'll take a look at where we are on the 5-minute. You can see yesterday out of the gates we came down, came up, went sideways right here, right at that VWAP right there, and then we just kind of dribbling up for the rest of the time. The gap down is right here from Sunday night. That was the gap down. So that's where we would need to get to close the gap. So it'll be interesting to see where we're at pre-FOMC. Yesterday's forecast, I was thinking that 2 o'clock announcement comes out. We see something like this. We come up into that gap, pretty sharp up move, and that's where we would get the sell-off. So we'll have to see how that plays out. Still could see something like that if we open and we come down, test this area, FOMC comes out, we come up and then come down. But that's basically going to be the level to hold against if the bears want any type of a shot of making a lower low. If we start to get above that, at that point, we're pretty much looking at all-time highs. Basically, we'd have to get above there, and then we're all-time highs. I do think if we do get to all-time highs, I do think it's going to be relatively short-lived. I don't think there's much meat on the bone left just with the overall market of where we're at. We're above this +2. Anytime we get above this +2, it's really a matter of time before we get a major pullback, crash, whatever you want to call it. So that's big picture. Obviously, we're just trying to trade one day at a time. Let's pull up the ES here. Here's the ES, relatively the same. We had the big gap down Sunday night. We are a little bit higher relatively than the NQ, just slightly higher, compared to where we're at with the NQ. But here's the daily. Get rid of those. You can see we are rejecting that +2. So we'll have to see if FOMC, do we come up, retest that, and then come back down? Or if we break it, there's a chance we do, like a moonshot type deal and really go parabolic. But again, I think if we do that, I think it's going to be short-lived. We're right at this +3. I mean, there's just not a lot of meat on the bones left, in my opinion. So we'll have to see we'll have to see how that goes. But price, if we go down to the 30-minute, price tends to stay or at least move quickly between these bands. All right, we can see when the market opened, we had a very quick move down, then we had a quick move up. We come right up to this band, and that's where we kind of stall out, kind of going sideways, bumping our head off of it. So at market open, if we start to come down, it should be a pretty quick move down to this area. All right, so if we break this low at like 60.95, we can expect a pretty quick move down to this like 60.65 area. That's a quick 30 point. That's moving between point to point. And then once we get to that point, what's the reaction? Do we get a bounce? Do we start looking for longs back up? That's how the market moves. You can see that's where the moves happen. We went to the -3, straight up to the -2. On a smaller time frame, we would see a little bit of a consolidation, right? We go up to the -1, kind of consolidate, come back, retest the -1. We go pretty hard up to the VWAP, consolidate, come down. So, I mean, you can see that that's where the market moves, is between those points. And it's fractal, so that's obviously on a smaller time frame, but then on larger time frames, you can see the same thing, right? We go from the +2 to the -1, to the +2, -1, +2, -1, or not -1, but +1, +2, +1. We can see price +2, come down. That's where we start to lose momentum, start to come down, and then the break point was here. So see how price moves. So yeah, we'll have to see what's in store for FOMC. I'm still thinking that we're going to have a big move. It'll just be interesting to see what direction. I do think that in general, we do need a little bit more of a pullback, even in the medium term. If we want to continue higher, I think a pullback into this like 5,600 area would be healthy, similar to what we had back here, right? Everybody was panicking here, right? Everybody was panicking, but that was a healthy pullback. And then we ended up going higher. So in order for us to go higher here, especially that we're at this +2, I think a pullback down to this +1 would be healthy. If we just go straight up, I think it's going to be overall short-lived just over the next coming weeks. So we'll see. Good luck today, traders. Size down, it's probably going to be a pretty big move. There's lots of potential in the market for big moves. So just make sure you risk appropriately. All right. Good luck today. We'll see you tomorrow.